Hello everyone and welcome to a case study video where we're going to be looking at a trade that I shared with you all on YouTube in the Monday GBPUSD breakdown. So this was an immaculate setup. I called the trade when we were around this point here. What I said was, on the approach to a swing long position, which for your information I'm still waiting for, I was anticipating a short movement to the downside. Now I gave two zones for this potential short, one of them being this zone here, and one of them being this zone here. What we had was an imbalance into this region, and then I also mentioned that this was my favorite region to sell from because we had a deeper imbalance and we also had these equal highs here in the form of this liquidity. So what I was looking for was a bounce from this demand zone for the market to then make a drive to the upside and sell off from one of these levels. I also mentioned I wanted to wait for confirmation as to not run into a loss at this first level or the second level. So we wanted to wait for confirmation, and these were the zones that I wanted to sell from. So allowing the market to play out, you will see that we had a little bit of consolidation around that point that I said I was expecting a bounce from. And then we did indeed have a big push up. Now at the first region, we had no confirmation, but when we tapped into the second region, we saw a lot of selling pressure come in and a nice bearish engulfing closure on the 10-minute time frame. Now this for me isn't where I would sell. This is a decent confirmation. We've seen the liquidity swept, we've seen the imbalance filled, and we've seen the zone fulfilled, but I really like to get pinpoint entries. So what I do from this point is scale to the lower time frames. In this instance, the 1 minute time frame is where I went and identified the structure here to see if we do get a break of the bullish structure that we have. Now, as you can see on the 1 minute time frame, after tapping into the midpoint of that 10-minute supply zone, we had an impulsive move to the downside. This impulsive downside move broke through the structure. So this was the first place where we saw the uptrend on the 1 minute time frame shifting into a downtrend. Obviously seeing this happen after a midpoint retest of the very precise supply zone we wanted to see is a really good indication that the market is going to soon move to the downside. So when I saw the impulsive move down and the continuation of lower lows and lower highs, I was very interested in this imbalance. And just above this imbalance, as you can see, is a 1 minute refined supply zone. So as I've said in previous videos, which you'll find over on my page, the tactics I use in the market can be used on every single time frame. The imbalances, the supply zones, can be used as well on the 1 minute as they can on the 10 minute, the hourly, the 4 hourly, or even the weekly. So once again, we just refine the 1 minute supply zone. We've identified this imbalance. So what we can now expect, now that the market is in a downtrend, is that this is the high of the trend, and that this imbalance is at one point going to be filled to trade into that 1 minute supply zone, form a lower high, and that is the point we want to sell from. So by this point, I've got my confirmation. I saw the 10-minute reaction, and the confirmation comes in the form of this 1 minute breakdown, the shift from impulsive upside and corrective downside to impulsive downside and corrective upside. Also with the formation of these lower lows, lower highs, more lower lows, okay? So at this point, I'm ready to set an order, and that's just what I did. Grabbed my order tool to plot this out, and then I went ahead in my MetaTrader and set this. My entry was right on 1.39029. My stop level was 1.39079, so a 5 pip stop, and my target was 1.385. So this was a total risk reward trade of 10.58R. That means we can make 10.58 whatever we risk. So why did I identify 1.385 as my target for this trade? Well, when we shift over to the 15-minute time frame, you'll see that before this large impulsive move, which has evidently left open a price imbalance or an inefficiency in price, we had this little demand zone. If we just plot this 15-minute demand zone on, you will see that that sits right at the top, that 1.38500 level. Okay, so that's confluence number one. Now, if you've been following me for a while, you'll know that I like to trade with key levels as my support and resistance. And key levels being the levels that end with 0, 250, 500, 750 are the only support and resistance levels I use. If we plot that on there, we will see that just sitting at the top of that demand zone is the 1.3850 key level. So that is a bang on precise level that I want to trade price into. with this inefficiency, with this demand zone, and with this key level, it's very likely that we're going to come and retest this level before we actually make any more movements to the upside, if that is indeed what we do. So my trade was now prepped. I've got my entry, I've got my target, and I've got my stop loss. Obviously utilizing that 1 minute refined supply zone for the entry. So what I'm going to do now is just clear that for the sake of keeping things neat. And from this point, it was simply a case of allowing the market to play out. Now that's the beauty of the trades I take. I can place a sell limit or a buy limit, in this instance, obviously a sell limit, and then go about my day and allow the trades to formulate, enter, exit as they wish. So this trade was taken late in New York session. The sell limit was placed towards the end of the New York session in the afternoon on Monday. And from there, we had a little bit of sideways action. This is due to obviously New York winding down. Between New York and Asia session, we do have a lot of consolidation. And that is what we saw for quite a while. Now, the market only really picked up towards the morning. And I think around 3 a.m. or 4 a.m. in the morning while I was asleep, my trade was triggered in. And you're going to see the precision of the methods I use in action right here. So the trade was executed within that region. We traded up right into the middle of the 1 minute supply zone, never surpassing the high, and then the market began making a move to the downside. I woke up just before 7 a.m., which was when the market was around this point here. What this showed was a break of structure as well. So I was already deep in profit by this point, around 4.5R, 4.5 times my risk. And with this break of structure now, I had the confidence and exactly the confluences I needed to just sit and hold this trade out. So allowing it to play out throughout the day, you will see that we did come down towards the target with precision and with speed. I personally closed this position at plus 9.75R when the market was wicking around this point. So my position was closed around there. Now, the reason I did this was we obviously saw this nice bullish blue candle, which could indicate we are ready to move to the upside. I mean, it's very likely that we're going to come into this key level, but when we start seeing these wicks rejecting the lower prices, it tells me that, maybe I should get out. The reason being, do I really want to risk 9.75 times my risk to make an additional 0.75 times my risk, taking it into the target? The answer to that question is no, and that's where the risk-reward thought comes back in. Some people say you should always hold your trade all the way to target because your risk-reward will be messed up. Now, if you're trading very basic retail strategies, yeah, very true, because you're going to be achieving 1 to 2, 1 to 3. But when you're trading with the smart money approach like this, and you've got a trade running 9.75R, should you hold it to make a 0.75R gain on top of that? Or can you happily close the trade without even a hesitation when you've got such a deep profit running? For me, it makes a lot more sense to secure 9.75R than to let it all go in the hopes of catching a few extra pips. So I actually manually closed my trade here. It did then follow through to fulfill the target for any community members that were in, because I did signal this live to my community with the entry, with the target, with the stop loss, and with all of the reasoning behind the trade as well. And then we did have a deeper sell-off. But all in all, it was a wonderful move. We did have a great reaction from the 1 minute supply zone in the night. Very, very low stress trade due to the fact I wasn't even awake when it triggered in. And when I woke up, I was running deep in profit at plus 4.5R. And that is the beauty of the approach that I use. Thank you for watching today's video, and I hope you found some value in the lesson that I've shared with you today. If you want to get everyday trading alerts and learn my smart money trading approach, head over to the link in the description, visit my website, and become a member of my trading team. I have a trading community where I share all of my trades, and I even have a trading course for those who are more serious about it and want to learn the whole strategy as well. So once again, thank you for watching, and I'll see you in the community.